Dallas inventory just hit levels we haven't seen since 2011, and nobody's really talking about it. But if you're planning to buy or sell in the next few months, what I'm about to show you could save you or cost you tens of thousands of dollars. But builder incentives are at record highs and homes are selling below asking. And the timing window is kind of starting to close fast, but I've been in real estate now since 2009, and this is pretty wild. So stay with me till the end as well, because the biggest opportunity I'm going to share with you at the end. Now, first of all, let me tell you what everyone's kind of missing about Dallas right now. The market didn't just slow down. It's completely flipped from where it was just a couple of years ago. Now, according to Redfin, the median sales price in Dallas is around $435,000. And when you compare that to the double-digit appreciation we've seen just over a couple of years ago, you can see how the market has really kind of cooled down a bit. But inventory is at its highest level since the early 2010s. And so Dallas-Fort Worth had 4.7 months of supply and inventory in Q3 of 2025. And last year at that time, the market had about 4 months of inventory. So the Dallas-Fort Worth area had active listings growing 30.9% year over year in Q3 of 2025. But homes are sitting on the market for an average of 58 days in Q3 of 2025, up from shorter time frames just in the prior years. Now, days on market are going up across most price points, and the average sell to the list price ratio is about 93.7% in Q3 as well. And so that means most homes are selling below the asking price right now. And by the way, my name is Levi, and we help people move to the Dallas area every single week. And in 2025 alone, we have averaged $10,000 under asking price for our buyers, and on average $20,000 in concessions, and not a single buyer has had to pay a penny of our commissions. And we plan to keep it that way for the next year as well. But if you think about what I just said compared to 2021 and 2022, when everything was like going over asking price, right? New listings jumped 10.8% while homes sold dropped to 15.2%. Pending sales volume is down a lot compared to the fall. Now, more homes are coming on the market and fewer are actually starting to sell right now. And you're going to want to keep this in mind when we talk about the specific timing opportunities when we talk about risk later on, because knowing when rates might drop could mean the difference between really getting in these deals or competing with 5 other buyers. Now, that's putting real pressure on sellers right now, which is why builders are getting so aggressive with incentives to clear year-end inventory. And of course, all of this is happening during the normal seasonal cooling we see pretty much every winter. I mean, traffic slows through the holidays, fewer listings hit the market, and buyer activity kind of naturally dips in that time. But this year, that seasonal slowdown really kind of is hitting a market that's already rebalancing. So if you're a buyer, you're walking into one of the most negotiable markets we've had in many years. And if you're a seller, you're competing not just with other homeowners, but with builders offering huge discounts. Now, you might be thinking that rates are still kind of high to make any type of move, but here's what the data actually tells us. As the week of ending October 30th of 2025, the 30-year fixed rate was around 6.17% according to Freddie Mac, and the 15-year was around 5.41%. And I know the rates are still high compared to where they were just in 2022, but rates have been dropping for the last 4 weeks straight. And when you look at the history, even a small rate drop can actually spark kind of mini buyer surges. And so the difference between 6.5% and 6.17% might not sound that much, but on a $400,000 house, I mean, that could save you $80 a month. And if you compare that over 30 years, that could add up to nearly $29,000. So if rates dip into the mid 6s or high 5s this winter, you could see buyer demand pick back up pretty fast, and even during this slower seasonal market. And that could tighten inventory quicker than people expected. But of course, consumers are also tightening budgets, and relocations are kind of slowing down a little bit. And Dallas-Fort Worth added about 46,800 jobs year over year as of May of 2025. So that's according to the Bureau of Labor Statistics. So that's a 1.1% job growth, which matches the national average, but it's still positive growth. But it's slower than the growth we saw in 2022 and 2023. Now, the rate lock effect is also real. A lot of homeowners have mortgages under 4% still from, the COVID era. And if they sell and buy something else, I mean, their monthly payment could jump by $500 to $700 for the exactly same priced house. And that's keeping a lot of sellers on the sidelines. But the rate dynamics are really creating a unique opportunity as well where buyers have the leverage. But that window could close pretty quickly if rates drop even more. But here's something that a lot of people really kind of completely overlook, and that's the builder incentives and the competition. Now, builders aren't just competing with each other right now. I mean, they're in it trying to get any type of buyer, and that is creating chances that I haven't seen in quite some time. I mean, builders are loaded with incentives because they need to clear year-end inventory. Nearly 6 in 10 new home communities are offering some kind of incentive, and over 75% of communities are offering incentives on quick move-in homes. And these builders are offering rate buydowns, closing cost credits, and price cuts that average about 5% on new construction in 2025. But I want to break down what this means for you. So say you're buying a $500,000 new construction home. If you get a 2-1 buy down, which means your rate is 2% below market the first year and 1% below market the second year. And again, for example, if the rate is 6%, that means you're paying 4% year one and then 5% on year two, and then year three it goes back to 6%. But on a $500,000 loan, that can save you about $490 a month the first year and about $253 a month on the second year. So that's a total of $9,000 in savings just over 2 years. Or the builder could give you $30,000 in closing costs and upgrades, and that's $30,000 you don't have to bring to closing or finance it into the loan. So if you keep this number in mind as well whenever we get into the seller's outlook in just a bit, because if you're selling a resale home, this is exactly what you're going to be competing with. So make sure you stick around for that. Now, of course, builders have to keep moving inventory, right? They have land costs, construction loans, they have investors who want results. So when the market slows during the season, they tend to get aggressive with incentives because empty homes, cost them money every single day. But that's your leverage as a buyer. And as for sellers, these aggressive builder incentives are really creating pricing pressure. I mean, you're competing with brand new homes offering $30,000 to $50,000 in incentives. So if you think about that from a buyer's view, I mean, they can buy your 5 or 10-year-old home that might need updates, or a brand new home with huge incentives and no maintenance worries. So the key is knowing really how to negotiate. You don't want to just take the first incentive package. You want to also figure out what else you can get, which is something that we always do working with our clients. So can they buy down the rate? Can they give us closing costs? Can they do both? Everything is negotiable right now. But do you want to know the best kept secret in the Dallas market right now? Here it is. Winter buyers can find better deals and less competition than spring and summer buyers. I mean, in most of the U.S., April through June is peak real estate season, and April usually shows the most steady price jumps year over year. So the seasonal slowdown means that fewer active buyers, which is good news, right? I mean, there's less competition for the homes that are out there. You're not fighting with 10 other offers on every decent house. I mean, you can take your time, you can get inspections, and actually think before making one of the biggest purchases of your life. But affordability, I understand, is still tough even at these rate levels. But, if rates dip even a little into the mid-6s or even mid-5s, that could spark a lot more buyer activity. So the key is really kind of being ready to move when rates drop. But rate buydowns are huge. And so, asking the sellers to buy down your rate with a 2-1 or a 3-2-1 or even a permanent buydown, or even throwing in seller paid closing costs, possibly even inspection credits or some home warranties. I mean, all of this is on the table because sellers know that they need to stay competitive, especially with all the new construction. But if you're open to new construction, winter is really one of the best times to look at buying, because builders are trying to close deals before the year end. I mean, you get pre-approved, you tour some communities and ask, for the full incentive package, right? I mean, that's what we're going to do. Coming with a strong but fair offer based on a recent comparable sales. I mean, you can ask for reasonable seller concessions, get your inspection done, and they're just way more willing to work with you than they were just 2 years ago. But I don't think you want to wait for rates to hit some magical number. I mean, if you're waiting for like 4% rates, I mean, you could be waiting for a long time. If you find the right house and the payment works, I mean, maybe consider locking it in. You can always refinance later, but winter is a great time to buy before spring demands really start to jump up again. And if you lock in a deal now, you kind of avoid the spring rush whenever the competition starts to heat up a little bit. But here's what no seller wants to hear, but everyone needs to understand, and that's the seller outlook for winter. So if you're pricing your home, like it's still 2022, I mean, you're going to sit on the market and watch it go stale. The winter market needs a different plan. You're going to see lower traffic through the holidays, but the buyers who are looking in winter are serious buyers, typically. I'm very serious. I mean, they're moving for jobs, growing families, real life reasons, right? And when you get a showing, it's usually someone who's ready to buy. But here's the important part. This isn't the time to test the market with a high list price. Price is your number one marketing strategy. I mean, you want to price smart from day one using very, very recent comparable sales. And I've seen sellers lose $10, $20, even $30,000 because they started off too high, let it set for 45 days, then had to drop their price below where they should have listed it in the first place. But the market is showing that homes in Dallas are selling for about 97% of list price. And pricing aggressively at or slightly below market value is really probably the fastest way to get full market value. I mean, your biggest competitors aren't just other resale homes. It's also the builders who are offering huge incentives. So how do you compete on that? I mean, you have to position on pricing mainly, and your home needs to look amazing. Fresh paint, clean, nicely staged, strong photos. Your price needs to factor in competition from new construction. I mean, that means offering your own seller concessions, rate buydowns, or being aggressive on repairs before you list. I mean, you want to expect longer days on market. The average right now is 30 to 50 days across most price points, but you want to focus on how your home looks and how you price it. But also there's an upside. I mean, if you list before the spring rush, you can stand out because there's really less competition. And by the time spring arrives, and you're competing with 50 other homes hitting the market at once, you're already closed and moving on. However, here's the part where everything I just told you could completely change in about 60 days. And the biggest risk factor is going to be mortgage rates. I mean, if rates drop even a little, that could tighten inventory in early 2026. You know, buyers who have been waiting to jump back in, I mean, they're going to jump on that opportunity. And the buyer leverage we're seeing right now might not last too long if rates even fall below 6 or go to mid 5s. Now, on the economic side, I mean, slower relocation inflow and consumer tightening budgets could slow demand for a bit. So that's the counterpoint, is that Dallas-Fort Worth has been ranked the #1 market to watch for the second year in a row by PricewaterhouseCoopers and the Urban Land Institute in their 2026 Emerging Trends in Real Estate report. So the report said that DFW took the #1 spot in both commercial and residential building prospects. And between 2018 and 2024, over 100 corporate headquarters moved to Dallas-Fort Worth alone, and Dallas is now the second largest financial market in the country behind New York. And we're getting our own stock exchange. It's going to be called Y'all Street. And the economy, of course, is diverse. It's steady, it's growing. So we're seeing a seasonal slowdown and a market rebalancing, but the long-term path is still on an upward trend, and any pullback in the winter market is a short-term adjustment, usually not a major collapse. And now for buyers, though, locking in a deal now means you could avoid spring price pressure. When competition goes up again, you're getting in while you still have room to negotiate. I mean, the homes you're seeing now could have multiple offers within the next couple of months if rates drop, and I've seen that already. I mean, if a home is priced correctly, we're still seeing multiple offers. And now for sellers, I mean, listing before the spring rush helps you kind of stand out. I mean, you're not fighting with the big wave of homes that hit the market in March and April, and serious winter buyers close deals. I mean, which means faster closings and fewer deals falling through. So the window we're in right now is kind of unique. I mean, inventory right now is at decade highs and builder incentives are huge. You got mortgage rates are trending slightly down and sellers are open to negotiating, and the long-term fundamentals are pretty strong. So at some point in 2026, probably by mid-year, things are going to tighten again. And again, you also got to factor in midterms are coming up next year. And so during the summer, the current administration, which has been pretty outspoken about housing in general, a lot of things could come into play. So they might try some things that could increase affordability or some special programs that people could take advantage of to drive housing demand. 50-year mortgages could come into play as well. Portable mortgages could come into play as well. I mean, that is a huge one. If you haven't looked into that, that's kind of crazy. And if that comes into play, I mean, who knows what's going to happen in the summertime of 2026. I think it's going to be very interesting. But again, midterms, usually the politicians in power want to do things to really help out the economy and help people, and affordability is one of the biggest issues right now. So if you're a buyer and you've been waiting for really kind of like the perfect moment, I mean, I don't know, this could be as close as you're going to get, maybe. I mean, if you're a seller and you need to move, pricing aggressively now is better than really waiting for spring competition. So whatever category you fall in, either buying or selling in the Dallas this winter, I think we should really talk strategy before that window closes. So you can shoot me a text or even an email. My information is down below or even on the screen. My business partner, Travis, myself, the team, we'd love to help you make a smooth transition whichever way you're going. And of course, getting the timing right is one thing, but kind of like picking the wrong type of home in Dallas can cost you tens of thousands in repairs or even lost appreciation. But if you really want to dive a little bit deeper, check out my video linked right here on which Dallas homes to buy and which to avoid. Especially when it comes to foundation issues, bad school zones, and overpriced listings. It could save you a fortune. And until next time, well, we hope to show you around town.